Morning all, how are we all doing? Morning Mark, morning Wozczek, morning Evil, morning Barry, morning Leon. How are we doing? Right. Sorry, I'm a bit late this morning, running late as usual. So this morning we're going to do the usual stuff. We're going to have a look through the zones, trade the open, which is going mental at the moment. Usual stuff, do all the analysis, look at the accounts, etc. And then we're going to this morning do some more back testing on the new ORB variation, which is this one here, and look at see if there's any ways we can optimize it with trailing stops, because this one basically is doing. Look at this spread difference. This is unbelievable. This spread. I have to keep pointing this out. This is Global Prime, this account here, Global Prime. And this is Darwinex. Unbelievable difference between brokers. Crazy. It's almost untradeable. It's virtually untradeable here. So yeah, I'm definitely switching. Mental. Morning, Chris. So yeah, so that's what we're going to do this morning, is going to go through the new variation of ORB, and basically just want to do some testing. I haven't had much time to test further than when I started retesting this previously, because I've been sucked into this Trade Manager dashboard project, which has just eaten up my time. And I haven't had any time to do any more backtesting, so I really want to get this trailing stop loss backtesting done. But as you can see by the results, I mean this is only short term. Obviously, it's only a couple of weeks worth of results, but yeah, I mean it's phenomenal. I've only been trading. Obviously, yesterday wasn't very good, but yeah, it's good strategy. So I just want to sort of hammer home a way to kind of benefit from some of the days I've seen this trade where it's not quite made money, but it had an opportunity to not make a loss. Like yesterday is a good example. We had some decent breaks yesterday, which with a trailing stop wouldn't have actually turned into losses. So they wouldn't have been winners, but it's all about stopping the loss basically and letting the win just take care of itself. So we will start off with news as usual. There isn't much today again. So yesterday was a no news day. We had Trump speaking, we had Lagarde speaking, but there's no scheduled news. Today there's no scheduled news either. It's a bank holiday in Japan today, so just keep your eyes peeled on that yen, because the yen might well have a busy day today. Sometimes on bank holidays in Japan, you can see how flat it is, obviously, because there's no Asian session today. Well, there is an Asian session, obviously, Australia, New Zealand, and everybody's trading, but there's no exchange open in Japan. So no movement during Japan, but we often see big ADR days on bank holidays where the US, more than the UK, really moves the yen. So we'll keep an eye on that. There's nothing really happening on ADR so far today. We've got Bailey speaking at 12:15 at lunchtime today. He's just doing a speech. Are we underestimating changes in financial markets? May or may not have any questions thrown at him there. I doubt he will, but he might do. So we might get some movement there, some volatility off the back of his speech. We've got Powell's testification. Powell testifying basically in front of the Senate. So Powell goes up in front of the Senate multiple times. I think it's once every. I think is it quarterly or monthly? It might be monthly. Or periodically, basically. He testifies basically, which is basically Senate's opportunity to grill the Fed. So it's a 2-day event. So that's today and tomorrow. A lot of stuff comes out in that sometimes, which we don't know about. So sometimes these testify speeches, if you like, can move the market quite a lot. I'm not sure how effective Fed's the Fed's going to be at the moment with what Trump's doing, because it doesn't matter what the Fed do. The market's really not interested in what the Fed think at the moment. They're interested in what Trump thinks at the minute, because he's making all the changes to the tariffs, which is basically what drives the economy. They will have to react to what Trump does. So the Fed have kind of taken a little bit of a back seat at the moment with Trump, which they weren't with Biden. So how impactful it will be, not sure. Maybe whipsaw, but not necessarily long-term movements off of what they say. First major news coming up is tomorrow, which is CPI for the US. So that's your first market mover this week. Overnight, due to unforeseen technical issues, what's that? Please refresh your feed. Okay. What's all this crap? Now I've got all this crap. I don't want all this. What have they done? Can I not turn all that off? I don't want your elite stuff, whatever it is. God, if they're going to do all this crap, I'm going to find another news feed, because I don't want all this. Look at this. You can't even see the news because of all their bullshit. Anyway, US tariffs on steel and aluminium to take effect on March the 12th. So Trump was coming out yesterday and saying what they were going to do with the tariffs for steel. They are at the moment implementing them. So that is basically going to come into effect as of March. Other than that, there wasn't an awful lot else. That was his only real announcement yesterday. There was nothing else. So, yeah, pretty much it. It's falling apart in Gaza again. Lagarde said frequency of shocks is likely to remain high, but there's nothing much else yesterday at all that came in. Yesterday they said they had a problem with the paying members, so made Elite free for all till sorted. Had to log out to get rid of it. I'll try logging out and logging in again. Oh my God, I don't know my password. Yes, I do. There we go. Still there. Still there. I've logged out and in. Still there. I don't know. Hopefully they'll sort it and it'll all disappear. Is that coming through in the stream as well, in the news feed? Yeah, and that stuff doesn't come in the news feed in Discord, so I might just stick to Discord. Discord's a bit delayed from the feed here, but I mean, at the end of the day, it doesn't mean a lot. Make a lot of difference. Oh, you remained logged out. Oh, okay. Yeah, I'll deal with it. They'll sort it out. Right. So that's your news. Not a lot today. Wasn't a lot yesterday. As you can see, there wasn't a lot of movement yesterday. So if you scan through the pairs, there was a lot of movement as such, but not really a lot of direction, apart from the Australian dollar, or rather New Zealand dollar as well. So there was some movement yesterday, but it was mainly Australasian. So there's some big moves went in, but most of the day yesterday was rotational, which is what you would expect. You tend to get rotational markets when there's no news. So they just go into balance and just start transacting. There's no reason to change bias, change positioning. So the markets just sit sideways and wait. So there's no ADRs today. Nothing's hit its weekly ranges. We've got a few monthlies. US dollar CAD is the biggest monthly extension at the moment. So that is, as we know, really extended. I've got two longs on this on the Zone Trader account, which is what this one is. This is the Zone Trader account I'm logged into at the moment here. So there is a good opportunity, I think, for a kind of mean reversion. But again, this is what analysis is all about. Signals will tell you something. They'll say, this is a reason to get in. When you look at the chart, what's actually happened here, we've been in balance with this pair for a long time in this range. And then we had that Trump tariff announcement. So actually, this isn't something that is potentially going to mean revert. It may do, but what we've actually done is just undone the Trump. And now we're back to where we were. So it could go absolutely either way. It's not extended. It is extended technically, but if you look at the whole move from there to there, that happened in 24 hours. Yeah. All we've done is where we were before that news event came in, we've just continued back down to what we were doing before. So whether or not this type of move will get reverted is very difficult to tell, because this is not news, this is not fundamentals, this is a Trump announcement which he flicked the switch on and changed his mind within 24 hours, which is what he does because he's told by everybody else to stop being an idiot. You realize what you've just said will completely bankrupt the US. What do you mean? You haven't thought about that, have you? Oh crap. I won't do that. I'll wait until next month. I'll give myself a month for everybody else to sort out my shit. Basically, is what Trump does. So this is where we are now. There's no reason, I don't think, for this to happen. However, from a technical perspective, obviously, when you look at things like RSI dashboards and ADR dashboards and moving averages and any other indicator, indicators are lagging price, and price has done that, but not for any real reason. So I am long on it anyway, but not really an extension that you would look at as being a normal monthly move, is it? We've got a couple of others in there, the pound CAD and the euro CAD, obviously the same reason, because of Canadian tariffs. That was the whole reason for that move. So the CADs have had the extension, but the extension has been undone. So some of them don't look too bad. That doesn't look too bad for long, but there's no ADRs, no weeklies. RSIs still pretty flat. Pound odd is an opportunity potentially on the hourly. I will be getting into another one on that today. So there's a good looking opportunity for along there. RSI extension, you're probably already in it. I haven't opened the account. I should already be in that one. Pound odd. So pound CAD. Where are we? Pound CAD. What is going on? Why is this not extended? Oops. Okay, I've got a real problem with this account. Something really, 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 really wrong with this account. They're totally, totally different RSI readings. I'm not getting any trades entered because that RSI is not 32.5. That RSI is 23. 21 median. Pound odd. Oh, hang on. Yeah, pound odd hourly. Oh, sorry, no, hang on. Oh, God. Yeah, no, I am in the pound odd. Okay, ignore me. I was looking at the pound CAD. Right, 23, okay. I'm just worried about this account because it's been going wrong. We've not been going wrong. It's just the data was really, really out. And for some reason, it wasn't updating data, which I've never experienced before. But I think it looks like it's sorted now. So ignore me. So yeah, I am already in this long, got 2 positions on. So yeah, we'll look at all those in a minute. But you've got that extension on the pound odd. Apart from that, there's nothing else that has got extended. I have been watching this and I have been flicking over and monitoring this just to make sure. But yeah, there's nothing else extended at the moment. You've got Aussie New Zealand on the 4 hour is extended. So that's a really big extension. We've broken out of that recent monthly high quite substantially yesterday. On the hourly though, I couldn't get an entry on it because there was no signal to get in. The first break we had was there and it just came out of RSI extension. So it is actually a short I wanted to take, but it didn't quite work out. And again, Aussie New Zealand, because of these ridiculous broker candles that we get, again, look at this. It's very hard to technically trade Aussie New Zealand at any time around the Asian start, because this is just such a big spread. But yeah, the first signal was here. And as you can see, the RSI was back below. So back below the 70 level. So the way I'm set up at the moment on the EA is I want to take trades above this level. If it tips above it and then comes down and is down here by the time it's signaled, I'm not interested. So I don't really want to change, but I'm considering a possible change down on a time frame, really, to go down maybe onto the 15 or maybe the 30-minute time frame, just to get those signals in a little bit quicker. However, all the back testing I've done on this strategy, you know, it has periods where it doesn't take many trades. When the market isn't particularly volatile, that's absolutely fine. I'm wanting it to be really stretched before I get in, which means that the signal has to be above that level, which means we've got to push way beyond that 70 level to actually get the signal up here somewhere. So it's still a good entry though. Yeah, a good chance of mean reversion on that. But the other reason, obviously, I don't mind too much about this account not taking too many trades is because obviously I'm trading the zone trade at EA, and Aussie New Zealand I'm short. So I am short already. There's an entry there. I need to put a new entry on that. I'll do that in a minute. So yeah, there's your RSIs, ADRs. There's really not a lot happening today. It's very, very, very quiet, apart from a couple of moves. So nothing to look at there. Let's just quickly see what the indices have done. DAX, clean break long. FTSE, clean break long. No trades on this account at the moment, but I will be taking a DAX 15 on it. The 5, 10, 15. No, I won't. I'll be taking a 30. So there's no trade on the DAX, no trade on the FTSE so far today. So I'm going to wait for the 30-minute ranges to go in, and then it will take one on that. Right. So let's quickly whiz over and look at the accounts on the VPS. So obviously this is the RSI mean reversion. Nothing happening on it at the moment. The trend pullback strategy hasn't done an awful lot at the moment. We haven't really had any decent pullbacks. As you can see, the N pairs are not trending at the moment. As this is a trend-based strategy, it's not doing a lot because there is no trend. The only thing that is really trending at the moment is the Euro Yen, and that is short. So I have one short on at the moment. Oh no, I've got Aussie Yen short as well. Yeah, I suppose that is a bit more trendy. When did that get in? I need an arrow on this so I can tell when the entries were. But yeah, so that I've got one on there as well. So Aussie Yen and Euro Yen shorts at the minute on that. But let's say this is in forward testing. I'm still not convinced on that strategy at the minute because I'm not sure if the yen is going to trend as much as it used to, but we'll wait and see. Right, I'm going to go through the zones and quickly set up the levels, and then we'll get on to the back testing. So Aussie dollar CAD, nothing to do, nothing to change. I'm short, it hasn't gone anywhere, blah, blah, blah. Aussie dollar Swiss, I'm looking for longs. I can't get in. It's up at the highs I wanted to be at. So let's have a go at getting in somewhere else. Yeah, I mean, I want longs. And that's the only real obvious spot. I mean, you could try and get in on something like that, but it's a bit too aggressive for me. So I'm going to wait, see if that gets down again. Aussie New Zealand, second short taken on that big move up yesterday. So I need another short entry. And it's already above, that screamed up yesterday. I need to kind of check this twice a day now, to be honest, because that should have been an entry. Although saying that, there isn't an obvious spot here I can pick. So where we are now is kind of nothingness. So what I'm going to do is I'm just going to see if we can double top the high of the day today. And if we come up and double top that, I will get another short on. Needing to see if this monthly high break holds, basically, on the Aussie New Zealand. So looking for third short on that. Target at the moment, I'm going to leave where it is, and we'll see what happens with the next entry that goes on. Aussie US have a buy on at the moment. It's on its way to target, hasn't gone anywhere. CAD Swiss looking to get in long on support resistance, which I covered yesterday. So that hasn't triggered. Euro odd, just looking for a 50% retracement on this yesterday. It's obviously gone further now. So there is no longer a 50% retracement level there. It's now all the way down here. I just can't get into this. It's just very annoying. I mean, there's an argument now for taking something like this. It's just a real choppy mess in here. But we have used this area multiple times to buy from, and it was where we were previously selling. Then it broke through. So this is where obviously everyone here selling flipped long, but they couldn't hold it because the news came in and they just flip-flopped around in a mess. Tried again, failed, and now we've got this big breakdown. So it's very, very difficult to pick a short entry on this. But, you know, where this is not a bad spot. It's roughly a 38 retracement on what we've done. So if we're going to do something like that and continue down, probably not a bad spot. Kind of picking at random on that one. Euro CAD looking for shorts. Still can't get in short. Won't let me in. I still really like this level. It's the large propulsion gap fill. I mean, obviously there's multiple areas that you could get in on this, but I'm not in any rush to get in. So I'm going to move down to here. This area, basically, we were buying, and then it broke through there. We came back and retested it really quick to make that propulsion gap. So I'm going to buy, I'm going to sell that propulsion gap there. The next, obviously, move will be to, if it does that, great. If it doesn't, the next move will be to scale in up to there for a short. It's difficult on these at the moment. They're moving so fast. Gap fill still in play on Euro Swiss short. Euro pound, first short on, second entry already set at last week's high. Euro New Zealand, again, I was looking for a retracement, 50%, which is still in play. So somewhere between 30 to 61.8 retracement. That's all I'm looking for on that. Just to see if we can get in, if we're going to continue that down leg. Euro US, no trades on at the moment. Looking for shorts. So what did we do yesterday? Not a lot. We did the gap fill yesterday, didn't we? So I'm just going to move the sell area down. So the gap fill is now complete. So this area here where we closed before the gap, we came back up into there. We had some selling reaction out of it. We blew through it. We used that area as a little bit of a support again. And then we kind of chopped around in that news and then broke back down. So we created that gap from Friday to Monday, filled that gap. So this is where the sellers are currently lying that broke through here. So if we do retrace back into here, I'll short that back down into those lows. And then obviously, if that doesn't work as a short, somewhere up here will be the next area. Pound odd. Right, so got 3 on this now. I need a 4th. which is easy. There's the 4th. In fact, yeah, I'll give it a little bit more, but yeah, that's the 4th. So hopefully we'll push down into there and get a bounce out of that today. Target to the upside, I'm going to move down now because I've got 3 on it. So I'm going to look at this area here. So we've got this accumulation, which we broke out of, created a propulsion move, which they bought over and over and over again. Yeah, couldn't make any more headway. We rebought it. We tried to buy it again and we failed. So when they come back up into here, if this is going to be a down leg, that is likely where we're going to find everybody that was long, flipped short. Will be my exit. I will have another position on, hopefully. Average will be moved down somewhere in here, so that will be the profit. Pound CAD, longs, looking for the next long, should get that on today. Not quite got me there, but yeah, if get a little bit more movement down on that today, and then looking to get out in the highs, so nothing's changed there. Looking for longs on this one, just looking to buy last week's low. Pound US dollar, have shorts on, looking for an exit at last week's low. New Zealand CAD, have long on. Yeah, just waiting for it to go somewhere. New Zealand Swiss, looking for longs. Already got long actually. Second entry didn't get triggered, so looking for an exit at the 2-week high, which is last month's high. New Zealand US, have short on. Yeah, just looking for that to come down. And US dollar CAD, have 2 longs on that one. And next buy is going to be down at this area of resistance, which we haven't tested yet. So that will be my next long. Other than that, kind of here, obviously this is the Trump move and we're back into balance. We've already looked at this one. That really is where I think is the maximum we would get to if we're going to push up. However, it depends which way the rallying works, isn't it, with the US at the moment. So I'm just leaving target up there for the moment. I'm waiting for some news. So basically all I'm doing at the moment with all these US pairs is we're waiting for CPI tomorrow. CPI is either going to do that or that. I'll either scale in or get out. So we're just waiting for the news. But I will obviously watch the account and see where everything is and take whatever off tomorrow. So pounds US dollar, for example, if I'm still in $300 worth of profit tomorrow, that's coming off. So there we go. So that's all the zones covered. Well, many ADRs are way below 100. Many ADRs are way below 100. Many close to 50. Yeah. Yeah, it's a funny time at the moment, but it's just a different time. You know, this is the thing. This is why we use ADR. This is why it's the most important thing. Anybody that gets in touch with me ever and says, I want an EA built, or I'm looking at a strategy or whatever, it's looking to make X number of pips a day, or you use an X pip stop loss or whatever. As soon as anybody mentions the word pip to me, I'm not interested. Because the market doesn't move that way. The market moves in volatility based on fundamentals, and that adjusts all the time. So if you've got low ADRs, it's because there's low volatility. So you have to adjust everything you do to the volatility that you're currently trading. It will explode and get more volatile, and that will catch you out. But that's all you can do. So when you get low ADRs, it's just a case of you have to increase risk and reduce distance that you target, or use a stop, or whatever you're doing. So, but yeah, they're low at the minute. Pound New Zealand's always the one I use as an example. I was trading this 4 years ago at over 400 ADR. It's 130, and it hasn't been above a couple of hundred in the last year or so. You know, it's so the volatility that at the moment, or since COVID really, is less than half. It's just the world's changed basically, and the fundamentals have changed. The markets have changed. It all changes. This is why nothing ever works. You know, these people that backtest these strategies over 10 years. It's okay if the market repeats what it's done over the last 10 years. But if you look at cycles in markets, look at volatility in its stock indices and things, you can't compare 15 years ago to now. It's totally different. But the average movement that something uses is always going to be a constant. This is why we use ADR. It's a constant, and it's a measurable constant. It adjusts dynamically to market conditions. If the market is doing that, the ADRs are doing that. If the market's doing that, the ADRs are doing that. So you just adjust your risk, your targeting, and your movement expectations based on the averages. That's all you can do. So we are low ADR at the moment, but that's because we are quiet. It's going to change because Trump's in charge. When it will change, who knows? When's he opening his mouth next? Even with Trump for now, there are more quick spikes during the day. No, this is trouble. Trump is a blessing and a curse at the same time. You know, I'm sitting on this pound US dollar at the moment. I looked at it yesterday. I was like, should I take it? It was about 200, and I was looking at it today thinking it's 300 today. Shall I take it? Might as well just hold on to it because nothing's going to change until tomorrow afternoon when the CPI numbers are released. I will bank that before CPI tomorrow. However, Trump could ruin this today, or he could make it 10 times better today. This is the Trump effect. You just don't know what's going to happen until he opens his gob. Just what we're living in at the minute. So just a quick update on the dashboard, by the way. This is my release candidate. So I've introduced a couple of extra features on it since I last showed it. I mean, it doesn't look much different. There's a lot of mechanics been changed in the background, basically. But we've now got 4 buttons here for controlling trade view. So we've got the button that releases the close 50% and 25%. So close all 50 and 25% of position. We've also got the percentage drawdown visible. We've also got the lot sizes visible, and obviously you can have combinations of them, whatever you want. We've got this new D button, which is my new favorite button. So this D stands for drawdown control. So what happens when you click this button is it will highlight any trades which will improve your average price. Yeah, so this is going to be the position trader's magic button. I might even color it gold. So when you hit this, basically it says if you close out any percentage of any of these trades highlighted in black, you can change all the colors and stuff if you want, but if you close out a percentage of any of these, they will improve your position. So if you have, actually, let's look at it. Let's look at the pound odd. Oh my God. I'm going to have to manually do it. So look at the pound odd. I haven't got the support resistance propulsion indicator on this account. Have I? Oh, it must have. How many A's? Hang on. SRP, where are we? Here we go. So let's move over a little bit. So this basically, you can see here, we've got 1, 2, 3 trades on, and there is your average price, the green line, yeah? So the average is 198,349, 198,349. So there's your average price. And what this is saying is you've got 3 trades here. All 3 trades are in drawdown, yeah? This one here in black and this one here in black. If you close out a percentage of those, they will improve your average price and make price come closer to where you are, i.e. make it easier for you to get out. If you close out this trade here, it will not increase your average price. It will not improve your average price. It will move your average price further away. So basically what this button does, this little magic D button, is it automatically highlights anything that is in a buy above the average or in a sell below the average. Yeah, meaning that if you close out a percentage of this, you'll improve your overall position, reduce your risk, reduce your lot size, reduce your swap costs, and bring the price closer to the average, meaning you can get out faster. What a button. Brilliant. So basically, if I was to do DD control on this right now, for example, I would be saying, okay, I'm going to close out 1.14% on the pound US dollar. I'll close the whole lot out. That will all disappear. Or I could say I'm just going to close out that one and bank 0.77. And I'm going to use that 0.77 to remove 25% of that and 25% of that, which means I'll still make a profit, but I will have closed out 25% of the lot size on something that's in drawdown and also improve the average price. I will not close any of this one out at all because that doesn't help me, doesn't get the average closer to where I want it to be. So you could also use it in the fact that I'm going to close this position out and bank 0.77. And what I'm going to do is I'm going to completely close this one out because then I've just got one trade on, because this one will improve my average price, obviously, because it's only going to leave me with one trade. So that will be the trade. But there's no point in doing that either, is there? Why? Because that trade is only in 0.12 of drawdown and you've got something that's in profit on it. So there's no point in doing drawdown control on that. That's why that one is in orange. So it's completely heat and also highlighted to show you that these are the trades that you want to focus on. So when you're doing drawdown control, focus on anything that's red and anything that's got a box around it, and it will keep your whole portfolio better balanced. This one is in white. This one would help me increase the average price on this trade. It's only in 0.18. What's the point? It's white, which means that it hasn't moved very far yet. Yeah, it's not in much drawdown. It's in 0.1 of drawdown. I don't need to worry about it. So it's going to be such a good tool for people that are starting out in position trading. And you're literally going to be able to instantly go, fantastic, I need to bank because we've got news coming up. I can bank all of that. Yeah, I can bank all of that. And that's it. So there's nothing else in green there. And it will go, ping, here you go. You've just made 1.8%. Yeah, 1.8% on those trades. You've got some drawdown here that if you use it to do these three, you're going to help yourself when the news comes out in case they go the wrong way. Good, isn't it? So this is, I think, at the moment where I'm happy with it for initial launch. There's a lot of extra stuff I want to put on it, but this does everything I want it to do. I've got some final back testing to do today because I need to just double check all of these calculations everywhere, which was going to take me a while because I've got multiple loops running to do different calculations in different ways. So I just need to check the calculations are all correct. But yeah, so it's ready, I think. And then I've got to build it for MT5. Just depressed myself dramatically. How does the copy account work? Is there a minimum investment? Yeah, I don't know. Yeah, I don't know. Is the honest answer. So this is the copy trading accounts. And when you click invest, it takes you into your Robo Forex account. I've put a minimum deposit. I don't. These are cent accounts basically. So this this account balance here of 252 is equivalent to 25 grand. This here is equivalent to 40 grand. So if you use a cent account, this is my recommended minimum deposit. If you're using a normal account and you're going to stick 40 grand in, or 4 grand, or 5 grand, or whatever, it automatically adjusts itself to the lot sizes taken in the account. So in here, you can see I've got some closed positions, yeah? So there's a 0.0013 sell. You can't do that on a normal account. On a normal account, that would be a 0 point. Depending on your balance, it would have adjusted that lot size. So if you were using a 25 grand account, it would have traded that with a 0.13 lot size. That would have been a 0.1 lot size. So it automatically adjusts itself. Minimum deposit, it's up to you. I don't know. But I mean, at the end of the day, do you really need to copy? If you're in here in the member streams, I'm not providing this from, I mean, I'm providing it for anybody that wants it, but you see what I do every day, and I would encourage people to do it rather than copy. If I suddenly lost internet connection forever or whatever, what are you going to do? You can't copy me. You can't watch me. You've got to learn it. So Dash is going to be a game changer. Yeah, it's going to be brilliant. I love this. I'm just looking at it now thinking I really, really want to close all this out and do DD control. Just because I can really easily with buttons. It's brilliant. I love it. More and more interesting every passing day. Yeah, there's still a list of features and functionality I want to add into it. There's lots I want it to do. I'm also going to put a little area here where it lists the last 10 trades you've closed out. So the thing is, when you close out this one, for example, if you were to close out 50% of this, I find that obviously when you close that out, because this is sorted by profit to drawdown, when you close that out, this trade will actually jump over here, because it will probably be, yeah, if I close 50% of that out, for example, that's going to be less than 90. So that trade will jump over there, and this one will jump here. So it's handy to see, I've just closed something. How many lots did I close? And how much was the profit? And how much was the percentage? Yeah, on that trade that I just shut. So I want a kind of a, this is what you've just done section, because I've noticed when I've been testing with this, let me go over to the test account. So this is the test account. So, so there you go. I've got a 0.29 there, for example. So if I close out 50% of that, I don't know what I just did. So what did I do? So what I actually just did was I closed out on gold a 0.05 lot size, making me not 3680, making me 3680 minus 145 minus 29. Yeah. So I need to know what is the net I've just closed. What is the percentage profit I've just closed? Now I know I can see that up here, because I've only closed one trade. So I closed out, there you go. So that's 36, but it's not, it's 3506 by the time you've done all the other stuff. And this is where these calculations I don't think are correct. I know, yeah, so it is, sorry, 3680 minus 145 minus 29 is 3506. So that's the net close. That's the net gain. This is what it's cost me. But now if I close another trade out, like 25% of that one on New Zealand US, I don't know what I just did. I just closed out a tenner. Now, if I want to shut out a tenner's worth of this, I need to now just maybe shut 25% of that one. So you kind of need something as a little summary rather than opening this up. I just want a quick summary of what was it? What was the amount? What's the percentage? What was the lot size? So depending on whether I'm using a percentage or whether I'm using a lot size to do my drawdown control, or whether I'm using money, because those are the only things you're interested in it. How many lots, what's the percentage, and what's the money? Depending on which of those I've just done, I need to see what I just did. So I want a kind of quick history section, basically. But that's, again, it's not key because you have got that data there and it isn't listed too badly, and it's also up there. So, you know, if you're doing drawdown control before news, you can go, right, I just shut out $47 with 22. So is there anything here that I can shut out that is less than 10% in drawdown? So that one there, for example, okay, well, let's take half off of that. So still in profit, and I've reduced my drawdown. Fantastic. I might as well close a quarter of that out as well. Take a little bit less money and reduce a bit of drawdown because the news coming up. Yeah, so that's the sort of thing you've got to use this for. And that's what the information you need to see to make those decisions. So it's just about putting in place the data to help you make decisions. Yeah. And obviously, ideally, you want to be shutting things out which are highlighted in black. In this case, I can't shut anything highlighted in black because I've taken silly lot sizes on this, and it's all out of whack basically because I'm just pressing buttons. But the interesting thing is, right, I know I'm only pressing buttons and mucking about, but look at my P&L, right? Since this is a demo account, since I've been developing this is basically what I've been doing every day. It's just pressing buttons over here in this column. I've got a column of buttons. I've been pressing them. Sell that, buy that, do this, do that. Just been pressing buttons at random. It's getting trades in so I can see it work, shut things down, make sure the functionality is working. Look at my P&L. I've done 12.64%. Pressing buttons at random, totally meaninglessly. I'm not using any strategy. I'm literally pressing buttons. This is what trading is about. It's about getting into trades, getting risk on, seeing what the market does and adjusting your price and adjusting your risk. Yeah, so my average price is here on this or on that, for example. If price is currently trading too far away from that, I know I need to put more lot size on to get that average price closer to where it is. So with the pound US dollar at the moment, if I take another pound US dollar now, long, yeah, my average price is now 123.816. It was 123.907 a second ago. I've improved my average position. Yeah, so all this data is what trading is about. It's not about finding systems, strategies, whether you should use this, that, the other. And that obviously comes into it because the more accurate you are, the easier it is to do. But at the end of the day, the market's going to move when the market's going to move. Your job is to react to your portfolio. This is what I say. I'm constantly, when I'm trading, I'm looking at this. This is the button. This is the column that makes everything clear. Where's my problems? There's a problem. I can see there's a problem now because it's red. I need to deal with the problems here. This is becoming a problem, but it's not a problem yet. That's a problem. Yeah, this is not a problem. Ignore it. Let it be happy. Get on with it. Just focus on the problems. And that's what the whole purpose of trading is all about, is making money. If at the end of the day, you don't know what your positioning is on anything, you don't know what your exposure is to anything, how are you going to make money? Yeah, it's not about finding the system. It's about managing your positioning and direction. It's only going to go up or down, isn't it, at the end of the day? So, right. So anyway, I wasn't going to do that. I'll do that another day. So long on the DAX, FTSE's about to hedge. You see how far I've got my offset set here, look, to deal with this bloody spread. So yeah, DAX is a clean break long. Let me just quickly check. Yeah, we're at all-time highs, so that's fine. I'll leave that where it is and assume that we're going to do a run for ADR today, which is all very achievable. FTSE's going to hedge, so I'll deal with a hedge on that when it comes to it. I have a long on the DAX and still no trade on the FTSE. So nothing on the FTSE today. 5, 10, 15, 20, 25, 30. There is no trades on this today because it hasn't done 20% of its average daily range. So no trades. But we have got one on the DAX because the 20-minute range was in the Goldilocks zone. Distance of current price to average price as ADR percent. That's very specific to position trading, but yeah, it doesn't do calculations for ADR. It doesn't know what ADR is because this is a data display. It's nothing to do with strategy, so it doesn't do. It doesn't know what ADR is. I'd have to code ADR and everything into it. the prob the problem with that is, like right now, I am just over 100% of ADR away from average on Aussie New Zealand, because that's the high of the day. When this moves up and does an ADR hit to the upside, I'm going to be 200% away from ADR. So as the day unfolds, you're going to see your average prices in relation to where price is now and ADR increase exponentially. So you'll start the morning off with it saying you are 125% of ADR to your break even. 3 hours later, that could be saying you are 205%. I don't know how useful that is, because this is the idea of this is for a decision making process. I can't control how far away I am from my ADR, and that isn't what I make decisions on. I make decisions on where are my issues that need sorting. I can tell you that this is the furthest thing away from ADR I have in my portfolio at the moment, because it's got 2 trades which are above the average. Yeah, so there's 2 trades here that I need to focus on drawdown control on, which will automatically improve my distance away as a percentage of ADR. So you're giving yourself more information that you don't really need, because if you just focus on this, you don't need to know that. You need to know these are the problems I've got. Yeah, this is a problem. I haven't color coded this yet. Currency exposure is something that I'm probably, I originally had in my spec a heat map for this, but I kind of realized when I was thinking about coding the logic for this, what is a figure that is worrying as exposure, because this only shows you your lots, your net exposure on 0.69 long. You can't apply a percentage to this because the lot size on each instrument is different based on the cost per tick per instrument per base currency. So for example, on the pound pairs, I will take a lower lot size than some other pairs, because if the currency that is being traded in is the pound and you're trading a pound pair, it's a 0.1 lot for $100 risk over £100 risk over an ADR sort of thing. On the US dollar, you would take a 0.15 to get the same amount of risk on over a same distance. So you can't actually apply heat mapping to this very easily. It's more of a I could have it set so that you could say if I've got over 1 lot long on something, and you'd have to adjust this depending on your account, then it would highlight where these are. So I'm not quite sure exactly how I'm going to do the exposure on that, which is why I've left it for the minute, and it's going to be kind of an add-on later. But yeah, there's thousands of things you could have this show, but in realistic terms, I am going to end up in here hiding the vast majority of this stuff. I don't care how many lots long and short I really am. So I'm going to be in here and I'm going to be hiding these columns off because I don't care. It's not important to me. Commission is irrelevant because I don't pay commission on this particular account. So, I'm hiding away the commission column. So if you I can add loads more stuff in here, but what you're going to end up doing is you're just going to have a load more stuff on the screen. I'm more interested in focus rather than information overload. But I get people want different things. So it would be kind of something that's probably useful. But it's something that is very, very dynamic, So for example, Aussie New Zealand, if this gapped up and then spread by half an ADR, the number it's showing you here is going to scare the crap out of you. But it's not. It's spread and it's gap and it's all that sort of stuff. So as price comes back down, that figure won't change. But as price goes up, it will just make things worse. So it's just, this is really, I think, your focal point. But, I can add things in at a later stage. Right, back testing. So this strategy, as you can see, is doing very well. All the back testing that I've done on this, so this is the new ADR strategy. Where is everything? EA testing, ORB v2. So yeah, so this is the new ORB variation. So these are the results of the testing that I did. And we got some very, very good return on drawdowns on a lot of these. Yeah, so making a fairly decent amount of return on drawdown. Some not as good as others. Gold, surprisingly, not too bad. So again, I may do something with gold. FTSE, all right. But what I have done at the moment is I've kept the strategy very, 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 very simple. So I'm looking at the opening ranges, basically. And we are taking trades, three trades basically at the 5-minute opening range, the 10-minute opening range, and the 15-minute opening range. That's literally it. And I'm saying, right, what should the minimum range and the maximum range be during those periods to identify that we've got a nice volatile open and trade it? Yeah. So it tries the 5, and if it doesn't fall within those, it tries the 10. If it doesn't fall within those, it tries the 15. If it doesn't fall within those, it doesn't trade. So as today is a prime example, yeah, we have no trades on the FTSE today because the 5 was too small, the 10 was too small, and the 15 was, sorry, that's not it. The 5, the 10, and the 15 was too small. Yeah, so it's all too small today, so we just don't trade it. Yeah. This one, however, the 5, the 10, and the 15 was too small, but the 20, which is part of the 30-minute opening range breakout, which is there and there, so that is your 30-minute range. The 30-minute was in the Goldilocks zone, if you like. So it's taken along on that. So what it's doing is it's basically adjusting itself for volatility. If you have a tight open for the first 25 minutes and then the market takes off, we will take a break of that. If it does that for the first 45 minutes, I'm not interested because it could do that for the next 45 minutes. We don't trade because you're just going to get chopped to pieces. So it's about finding where the Goldilocks zone sits within each instrument. What happens is, as you can see, you get a break and it then has its 10% stop loss on, 10% of ADR, and that is used across the board, 10% of ADR as a stop. So it uses a fairly tight stop, but we're trading a 20% ADR range as a minimum. So we're saying you can retrace halfway roughly into the range that you've got, something around about that area. So we're looking for a break and a go. If it doesn't break and go, we don't want to be in it. We'll try one in the opposite direction. But when it breaks and goes and then stalls and then comes back and then sits around and then goes a bit higher and then comes back down, back inside the range and then decides to do that and this, and you end up there at the end of the day, you take a loss on that break that didn't work out. Adjusting this stop as we go will basically mean if you get days which are choppy and don't quite get to your target, what we're not going to do is take a full loss. We're going to take a smaller loss, which is only going to increase the return on drawdown on the account because all the losses we've got in there at the moment are going to be smaller. However, what we don't want to do is trail too fast so that what happens is we have a day that goes kind of like this. We break out, we pull back, and then we go, and then we pull back, and then we do that, and then we do that, and then we go up there. Yeah. So what we don't want to do is drag our trailing stop up too quick because what's going to happen is we're going to get stopped out and we're going to miss the move to target. Yeah. So it's about trying to find what an optimal trail is, and it needs to be a percentage of ADR. So the inputs that we have in the EA are we are targeting 0.2 to 0.4 ADR as our range. So we're saying the range has to be a minimum of 20% of ADR and a maximum of 40. I mean, if it's gone more than 40% of its ADR at the open, it's done. Something's very wrong, isn't it? It's either going to scream to 300 ADR for some reason, in which case, yes, you probably did want to be on it, but the number of days it does something like that is, you know, a handful of year, isn't it? So we're looking at norms. We're looking at something we can trade on a regular basis. So it makes sense to use that 10% of ADR as our stop loss, which we've got in place. So when we're looking at trailing stops, the options we've got basically for trailing stops are a percentage of ADR. And as we're using a 10% of ADR, it makes sense to use somewhere between a 10 to, let me just set this up actually as a test. It'd be the easiest thing to do, wouldn't it? So let's test on, let's start on the DAX. Nope. Okay, so this is the DAX set that is actually going at the moment. We'll test trailing stops. So the trailing stops, let me just make sure this is set correctly. 10:05, 10. It's not using the 30. I've got to test the 30 as well. But I'm trading the 30, but I haven't tested it. So I've just noticed it's worked quite a few times. So trailing stops. So we will test basically, let me just uncheck everything else because I've got the right percentages already set. So we just want to test trailing stop. So as a percentage of ADR, obviously our stop loss is 0.1. So we can't use less than 0.1 for a trailing stop, because what would happen is as soon as the trade gets opened, it would just move the stop loss up. We know the 0.1 is optimal. So 0.1 has got to be the minimum. So we can go up from a 0.1 to maybe a 0.3, and we go in. We'll start off with 0.1 increments because that's going to be really quick to test. So we test either a 10%, 20%, or 30% trailing stop loss. And when we want to trigger it, would be either when we've moved 100% of our stop, which is 10% of ADR, or we could delay that trailing stop starting. So it needs to have moved 20% of ADR, i.e. we've got a 2R reward, and then we could say, right, move 10, 20, or 30%. So what I'll do is I'll do that in 0.1 increments as well. And as our maximum trailing stop is 0.3, we might as well use a 0.3 for when we're going to start as well. The targets on this are set to 3 ATR basically. So this here, as you can see, we've got our trade there. 10% of ADR is 252. So that is our stop loss there. And our target is set up there, which I think, am I using 4? Or am I using 2? I'm using 4 because it didn't really matter which we're using. So let me just set this to 4. So it's a 4R basically, 0.4. So it's a 4R return on drawdown. Yeah. So that is this test here in the DAX. So it's something like let me just find the exact set file. Using nose and nose. Whoops. So it was this set file here. Yep. So it gives me a 3R, 3 return on drawdown annualized. Yeah. So in this case, whatever the lot size was, is using it's done $340 of drawdown to generate $1,000's worth of profit. It took 181 trades. Obviously, depending on your martingale factor, you can obviously increase the risk and obviously increase the reward, and this will make more money but do more drawdown. So I've got it set at the moment, I think, to 1.2. Yeah, 1.2. Doesn't really matter what you use there. It's just going to increase the risk, basically. So the reason I'm using a martingale on this is I'm looking at it as a prop sort of strategy, if you like, to see how effective it would be on prop, because obviously you want to pass quickly, therefore you want high profit quickly, and obviously with that comes high drawdown, which is a problem. But anyway, so we'll test this one. We'll do an optimization on it. I'll use open prices to start with. I haven't done any testing on this account. DAX. Too many symbols. No, that would be too simple, wouldn't it, to be able to search it? Let me just find a DAX. How many 5-minute bars are there? Call it. One sec. Let me just quickly do some quick maths. 1,000. So I need at least 10,000 bars. Pre-market. Yeah, that should do. I'll call it 11. So that's 11 days of ADR data, basically. Okay. So I'll quickly test this on open prices. It's going to need to do a regeneration of the history file because all my testing was done on another MT4 platform. So just needs to regenerate the history file, which won't be a second. So this is a good example today, actually. Look, so there's our break. We've moved up that far, but our stop loss is still here. So if we were using a 0.1 stop, what actually would have happened is our stop loss would have moved up to somewhere around about here, reducing our risk by 50%. Obviously, the problem is if it was to do something like that, we would get stopped out and we would miss the trade today. So leaving it in place makes sense because it's fixed. We're using 10% of ADR. So when you break, I don't want you pulling back more than 10% of ADR. If you do, get me out. What we're doing is we're incorporating more complication into the strategy by saying, how should we trail? And is it going to improve the performance of the strategy? So there's our optimization results. So I'm using a 0.1 lot size on this. So return on drawdown is 1.29. Sorry, profit factor is 1.29. Let me just open that up. I'm just going to paste these at the bottom here for the minute, just so that we can see what the difference is. So that actually reduces our profitability. So our profitability now has gone down to, or return on drawdown has gone down to 1.58, 1.39, 1.6. So 1.6 is the best, basically. What we were achieving was somewhere between 3 to 2.5. So it's halved it. Yeah. So trailing stops in this particular case on the DAX do not improve it in any way, shape, or form, because what we're doing is it's saying that what you're going to get is a lot of the time we're going to move around like this at the open, and you are, if you're trailing yourself, going to stop out much faster. So let's just have a quick look at the size of those trailers. Let's go to enlarge those columns a sec. So a 0.1, let me just see if I can sort those without sorting the rest. Yeah. So that one there, basically, the one that gives you the best result is using a ATR trailer of 0.2, so 20% of ADR, and it starts trailing after 10% of ADR. So our original stop loss is 10% of ADR. So what it's saying is, as soon as it's moved the same distance as the stop, 100% of your stop distance, it will start trailing with a 20% ADR. So this will stay exactly where it is when it gets to there, but any more progress beyond that point, it will then start to move the stop up. It would make sense that that is the most profitable variation of the trailing stop, because if you think about it, we're not actually adjusting this trailing stop until we've gone beyond 100% of the move. So the break has worked, it's happening, but we're not going to change this until we actually start to make some decent money. And then we're going to start to trail this up. The ones that don't work as well and don't produce any return on drawdown, which you can't see here because it's behind my head. If I remove my head, it would make more sense. It does work. This one down here, which is returning drawdown 0.12, so that's the one that's 1.6. This one returning 0.12, basically. You are using a 0.1, so 10% of ADR trailing stop, but you are starting it immediately. So what we're doing is, as soon as we take that break and the first candle closes, we are basically moving our stop loss up by the distance. So you are keeping a 0.1, a 10% of ADR trailing stop, constantly on price. What is price going to do from the breakout to the target? So if your target is there and that is your breakout and that is your stop loss, as price breaks up, it's going to get there using market structure, highs and lows. Yeah, if it's going to trend up there. If it's going to go parabolic, it's not a problem. But if it's going to trend there, it's going to move up. Do you think it's going to pull back by 10% of its average daily range every now and again on its way to its location? Of course it is. So what's going to happen is, if you're using a tight 10% of ADR trailing stop constantly, you're going to get stopped out before you get to your target. Yeah, this is why I do not like trailing stops, because yes, they do reduce your risk, but they also stop you getting to your target. This is the problem with them. The wider they are, the better, but they still stop you getting to your target. If something breaks and then it pushes up by, if let's say your target is 40% of ADR, as I have it set in these set files at the moment. If that's your target and it pushes up 30% and then it pulls back 20%, then it pushes up 10%, pulls back 5%, pushes up 25%, pulls back 15%, and then goes up and achieves a 50% of ADR move from the initial breakout. What's happened is, you've had multiple opportunities during that move to stop yourself out. Of course you will, because price doesn't go in a straight line. So adding the trailer isn't effective. It does not give you any benefit apart from reducing your drawdown, because any trades that don't hit the target and then completely reverse on a news event or something, you are going to take 100% loss on those trades. Whereas if you use a trailing stop, you might only take a 10% loss, or you might maybe make a 5 or a 10% gain on those ones that we make 100% loss on. But what will happen is you will miss 90% of the targets because you'll be stopped out before you get there, which means that your risk reward is changed from a 10% and a 40% target in this case. So a 4R is what we're looking at. You're changing that 4R into something like a 1.5R. So it's still going to be profitable. Yeah, it still makes money. Still return on drawdown is above 1, which is profit. That's what, you know, if you want to use a trailer, it's still going to make you money, but it's not going to make you anywhere near as much money as if you don't use a trailer. Okay. So the reason I didn't include any of this testing in my previous tests was because I've done this testing on virtually every strategy I've ever run that uses a stop loss, and I have never found a trailing stop to improve profitability ever. I've never found a stop loss to improve profitability ever, which is why I don't tend to use them. However, on momentum breakout strategies, which are on low time frames, they do work. You need a stop unless you're hedging, which is basically a hedge is just a stop. It's just we're stopping in a different way. Yeah, we're freezing price rather than closing positions out. So we're buying time rather than taking loss. That's the difference between a hedge and a stop loss. So that's basically the DAX. So let's do a quick test on a different instrument and let's see what it's like on the NASDAQ. And just see, because then I think the NASDAQ was the top performer. Yeah, was it the S&P? Wasn't a lot in it, to be honest, but we'll go with NAS because that was one of the top performers. So NAS, just change the target as 0.4. That's okay. So times are 445, 444. That's fine. Make sure everything's unticked. I know. Keep those in place. So there's your trailing stops. 10.4, and we're using 20 and 40. Okay, that's fine. I'm also going to need to match the tick data for the NAS. This is only on open prices, obviously. So, see, why don't you find NQ? N? N. NASDAQ. Oh, go away. I don't want you to search. NASDAQ was down near the bottom somewhere. USA Tech. Right, so we'll try the NASDAQ. Now, this is on open prices, so this is very rough testing. The other thing to consider with trailing stop losses is there is a very, very, very big difference between trailing your stop loss on tick and trailing your stop loss on candle close. On tick, what's going to happen is if you get a big spiky move like that, yeah, you will get stopped out on that one candle because your trailing stop will move up every time there's a new tick high made, which means your stop loss does that. Yeah, and by the time that candle is closed bearish, you're out. The next candle's bullish, you're dead. Yeah, so on close basically uses the closing price of the candle. Yeah, here's a good example. Look, we're pulling back. We're going to probably stop out on this trade. What it would have done was nothing in that case, that trailing stop. It wouldn't have helped, would it? It wouldn't have moved it because we didn't get more than 10% above the opening range break. But what it's going to do basically is if you do it on candle close, is this is where your stop would be from a on tick perspective, and on close it would be somewhere like that rather than there. Yeah, because it's the difference between the high and the close is the difference between how your stop will trail. So another important thing to do tests on is do tests on open prices, which is going to use that, but use tests on tick as well. It's going to give you a completely different trailing profile, basically. So it's important to test both of those and see what the difference between them is. But we're just going to run this one for the minute on the NASDAQ and see how we get on. Okay, so 1.54, 1.57. Probably don't even need to port this data over. Our profit factors are 1.86 and down from there, basically. So actually, let's port some of these over. Let me filter this down to the correct set file as well. There are much better performing set files than the one I'm using, but I'm using one that I think is replicable rather than the best. So I am using that one there. Okay, so let me get that data out from here. Did I just click on there? Oh, no, all of that. So sort that. There we go. So using a 10% trailing stop loss on the NASDAQ, and using it starting at 20. So again, it's the same as we had on the DAX, look, interestingly. So on the DAX, it said use a 10 or 20% trailer, starting at 10 or 30% were the highest. On the NASDAQ, we want to use a 10 or 20% starting at 20%. It's going to give you a better return on drawdown in this, or roughly the same return on drawdown in this case, to what we would have achieved without using a trailing stop. So on the NAS, actually, it's marginally better, ever so slightly, like 0.1 return on drawdown better. Not a lot, really, is it? But we got a $6,000 drawdown and we made 30k. So think prop. 30k a year off of an account in prop with a $6,000 drawdown. Absolutely achievable. Yeah, we're not doing anything complicated here at all. We are literally just, in this case, using a trailing stop. But when not using a trailing stop, same thing. So it's, again, a little bit inconclusive. It doesn't improve the strategy. So there is no stop loss variation here that makes the return on drawdown better than what I would get if I just didn't bother to use a trailing stop loss. What it's going to do if you use a trailing stop loss is some days you'll move up 2R and stop out, because it will move up 2R and move down 3R, and it will stop you out and you'll go, damn, I could have taken 2R. In which case, why not move your target down to 2R? Do the test, you'll see the results. It's still profitable. But if you add a trailing stop onto it, what's going to happen is it's going to stop you out potentially on some cases in profit, but then you're going to see it fly off to 4R and you're going to get cross. So what's going to happen using a trailing stop is it's just going to add another variable in that isn't going to help you in any way, shape or form make more money. It's just going to frustrate you, because some days you'll be going, that was brilliant. Some days you'll be going, I wish I hadn't used it. Every day you're going to change it, and it's just not going to help you long term, because you're going to be fiddling around constantly with settings. So this is the findings that I have from most strategies that I ever test. If you apply a trailing stop, you will not get to your target as much. Yeah. If it's not going to work, the trade, it's not going to work. If it is going to work, it's not going to go like that. It's going to go like that. Yeah. So that's your goal. This is how it's going to get there. Some days it will get there like that. Some days it will get there like this. Some days it will get there like this. You don't know how it's going to get there. It's either going to get there or it's not going to get there. Adjusting this bit doesn't help. Very, 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 very rarely have I ever put trailing stops on things and thought, oh, that makes a massive difference. It doesn't. The other factor that you need to also bear in mind is if you are going to use a lot multiplication in any way, shape or form, even if it's a 0.1, a 1.2, which is, you know, anything above that, I start thinking this is martingale and it's going to blow at some point, which it will. But if you're going to use this, the other thing you've got to bear in mind is if you're using a 1 lot and then you change it to a 1.2 lot, and then you change it up to a 1.3 and then it goes 1.5 and then it goes 1.8 or whatever it does. If you are using a trailing stop loss and the 1.8, which is the one that is going to hit target today, recoup all of the losses of the previous 3 trades that you've taken and generate a nice 2 to 3 grand profit, if that is the trade that goes up like this and down like that, stops you out and then goes to target, your lot size resets the next day at 1. You have not been able to use lot multiplication to recoup gradually any losses that have been made over previous trades. So it screws up the entire strategy. Yeah. So one of the reasons I have, as you'll probably see here, I filtered everything down to ignore any lot multiplication. And I really should change this, because that word is not the word to use. Martingale is 2. Somebody picked me up on this the other day. Someone put a comment in there saying in one of the groups something about he said he was using martingale. When I looked at it, he wasn't using martingale. He was using lot multiplication. He was actually using 1.25. It's not martingale. It's gradual incrementation. After 5 trades, you're using martingale on the original trade you took 5 ago. That's not martingale. Yeah, so this should really be lot factor or multiplier factor or something, but terminology is what everybody uses, isn't it? Yeah, so increasing that does not help you in any way, shape or form, because you will get stopped out on the one that was meant to make you the money. And if it doesn't make you the money, you should stop out on it and then try again the next day. But by adjusting this variable, the trailing stop, what you're doing is you're adding another dynamic into the trade. So at the moment, it breaks and it either does that or that. It's binary. Adding this in means that my trade is now no longer binary. It is moving up and down, but the stop out will occur dependent on the price action on the day. The price action on the day is unique every day. That's something that is another variable which this interrupts with. Yeah. So I was expecting this to be the outcome. That's actually better than I expected, but it's a bloody good strategy. So yeah, yeah. So for me, trailing stops aren't something that I really would consider using. Trailing stops are useful on, for me, a trailing stop I would apply to something like an aggressive drawdown control position, or for example with SIH, an aggressive hedge exit. So yesterday's a good example of the DAX. Yeah. So yesterday's exit on the DAX was a 5R. Remember I said yesterday we're watching this weekly level for a bounce. It's exactly what happened yesterday. It just didn't bounce. It just hit and flipped about. But that was my aggressive hedge exit yesterday. Now, if an aggressive hedge exit on the SIH, for example, is going to work, that is worth trailing down, because if it doesn't work out, it's a high risk, high trade. So for aggressive drawdown control, if you're in 5 positions, for example, in your position trading, and you've set aggressive drawdown control to be on the 6th position, as you know, that uses a stop. Just converting that stop into a trailing stop, if it starts to work, is worth doing, because if the aggressive drawdown control position starts to work and you can get it to break even, if it then stops out and then goes like that, you don't lose the aggressive one. This aggressive drawdown control positions can be 1.5% risk on an individual trade, rather than 0.25%, which is what we usually roughly use, isn't it? So there are uses for trailing stops, but they have to be used in the right mechanism, and it's got to be on a trade where I'm thinking this is risky. I really am uncomfortable with it, which is aggressive drawdown. But for general trading, they don't improve performance. So you can test all of this obviously yourself. We've got in the opening range breakout EA, there is a trailing stop mechanism in there. Most of my EAs in the past have had some kind of trailing stop mechanism. The other way that we can test this as well is, rather than using a trailer based on percentage of ADR, which that makes sense in this case, because obviously we're using risk over a percentage of ADR, so it makes sense to use that. You can also use a moving average as a trailing stop as well. Now, the problem with moving averages as a trailing stop is there are a million variations. So there are so many numbers you can put in as moving averages, so many types of moving averages, and so many time frames of moving averages you can use, that what tends to happen is you will just find the one that worked the best in the past, which is curve fitting. This is a percentage of volatility. That is going to be a constant moving forward. We are using how volatile the market currently is. The moving average doesn't respect volatility because it's trailing by 50 candles. Doesn't help, or 20 candles, or whatever. So it doesn't really adjust for the volatility of the movement. It just basically draws the line. So it's not anywhere near as effective. But that is another one you could use potentially to test this. I'm 95% sure, probably more like 99% sure, you're going to get the same outcome, because those 4 R's that we are making all this money on aren't going to be achieved if you're saying get me out if it pulls back, because it's going to. Go and find me something that's done that to target within 2 candles. That's not how it works, is it? Look at the DAX. Oh, look at that. So now, if I was using any kind of trailing stop, I probably would have been stopped out on that. But anyway, probably going to stop out anyway. But yeah, you just missed me. But these are the margins we're working with. Yeah, if this now flies up to 4R today, the difference between me making money and someone else making money is the spread of my broker. That's coming into it. Yeah, that input is going to change the results completely. Yeah, so there's so many variables. So you want to keep them. The number of variables, the number of system parameter permutations that can affect the outcome, you want to keep it as low as you possibly can, because those are the ones that work, because they've got more chance of being repeated in the future. So there you go. So I don't think there is an advantage to using those trading stops. I will do a little bit more testing on this. I will test the Dow, and I will test also the FTSE. I'll do a couple of variations also on other stop loss sizes, and see, if it is worth waiting until we get to 3R and then starting to trail. But we're so close to target. The other thing, actually, I'll run this test now because this might be a useful one. USA 500. Whoops, hang on. I was just going to... USA 500. When you know the symbol, it's actually quite good. So I'm just going to run this test quickly, and I'm going to use trailing stop, but I'm going to trail stop loss to... Oh, it was set to break even only. Hang on a minute. Was that set to break even only on my other tests? Right, now that might make a big difference. Hang on, let's go back and have a look. The character limit. Okay, let me just rerun that test on... Let's do the rerun on the NAS because we've just done it. And let's change that because that was set to true. So that was only trailing to break even. So let's run that test again on the NASDAQ and double check what difference it makes by not trading to break even. So that was the other test I was just going to suggest doing, because there may be an advantage to waiting until it's moved maybe 2R up. So in this case, we've had a 40% move on the day, and then just moving ourselves to break even. But that is the test I've just done, and those are the results we've just seen, which would make sense why I was a little bit shocked that they were actually quite good, because we weren't actually trailing all the way to target. So let's have a look at these results and see what the difference is on the NAS. Very, very, very little difference. Look, so this is basically trailing to break even. This is not trailing to break even. So this is trailing all the way. The drawdowns range from 9.4 on the top ones, like the top three, basically 9.5 to 10, 9.4 to 9.6. So your drawdown is going to be ever so slightly improved if you trail constantly and don't stop at break even. Your profitability doesn't really change. We're looking at 4.73 up to 5.16 and a 4.82 up to 5.11. So there's absolutely no difference there. There's I mean, on the very top one, it's kind of 0.5% drawdown difference. On a day-to-day basis, you're just not going to notice, are you? So again, the test is the same. So that was the other test I was going to suggest doing, which was just done. So it kind of confirms the same thing. It's not really going to make any difference. Yeah. When you're doing system development and testing, all you're interested in is it making it better? If it makes it the same, roughly the same or worse, there's no point in implementing whatever it is you're implementing. You know, changing timeframes. Does it make it more profitable? Yes, massively. Okay, well, let's look into this and restart all our testing on that time frame because it's obviously a lot better. Let's find out why. Is it make it worse? Yes. Don't even bother with it anymore. If you implement something like a trailing stop loss and it makes virtually no difference, if this suddenly came out at 7.5 instead of 5, a 50% increase on return on drawdown, I'd be all in. Right. Okay, let's pause all this forward testing and now we need to find out which moving averages should we be using as a trailing stop, or which distances of ADR should we be using as trailing stop. And you start to implement it, you start to test it, but this doesn't make any difference, does it? So again, that can all be tested as well, but in this case, it's just no point. Not worth it, is it? So roughly making 6 to 8 grand drawdown to make roughly 30 to 35 grand a year. Is it a year? Did I test it over a year? Oh no, yeah, it's roughly a year. Yeah, so January 24 to December 24. So 30 grand a year, roughly, per instrument, 4 instruments. It's roughly 100 grand a year strategy with around about a 30 to 40 grand account. So it's about a 3R return, basically. So if you put 50 grand in, you'll probably end up with 150 grand at the end of the year, something like that. So good little strategy, but it's not massively different to the original ORB. The other next tests I've got to do, look at that for a save. Oh no, it stopped me out, idiot. Sorry, that already stopped me out. So that's a loss. Wrong stop loss. I wish you could color stop losses. I want that stop loss to be green, and I want the other stop loss, I wanted that to be, no, I wanted that stop loss to be green and that stop loss to be red, because this is a short stop loss and that is a long stop loss. I can dynamically draw those lines in. It's just quite annoying. When you're using a 10% of ADR, you don't know which stop loss is yours. Oh, it was the stop from the cell below. Yes, that one was the one that just missed me, but that's fine. So you know, again, today is not it's not over, because if this now decides to break short and does that, that's going to be a biggie. And obviously we've got the Nasdaq, the Dow, and the S&P this afternoon to trade as well. So unfortunately, if you look at it, the FTSE was the one to go on today. So the 15-minute ORB on the FTSE was a nice clean break, but it's only done 1R-ish, not even 1R yet, really. But actually, if you'd use a 10% stop, it's probably sitting at 2R at the moment. But again, not really going anywhere, is it? So, yeah. So there you go. There's my findings on that. So using a trailing stop is not going to improve your strategy. And there's very few strategies, in fact, as I said, that it does improve. Cutting risk on very, very small time frames when you're trading like 1-minute charts and things like that, I think there is a benefit in that. And also sometimes is if you've got manual levels you're approaching, which make obvious sense. So, looking at the DAX yesterday, that's the level I called yesterday as the high, which is exactly what happened. So when you're getting to these sorts of levels, cutting risk or locking in risk when you achieve a level in case you get what you're expecting is worth doing. But this is not something that you can automate, because how people identify levels is very, very different. Some people will have been saying that this supply demand zone gap yesterday was where you wanted to stop. It blew through that immediately. Yeah, so there's advantages for using manual stop loss adjustment intraday as an analysis based thing, but the automated versions of it, the reason edges work is because they are using a risk reward which is positive, and you've got an edge which plays out constantly. So adding a variable into it doesn't work, does it? There we go. So that's it. That's the outcome of that, and it's exactly what I was expecting, to be honest. So I'm happy with that. I need to get out of the FTSE today. So that's not a bad exit in propulsion today. So that is your break yesterday. So we'll see if we can come back to yesterday's break to the downside. We've also got yesterday's high, previous day's high, which is Friday's high there. That's a previous propulsion gap retest. So there's that level there as well, which potentially could be a bounce point today. So for the downside, either there or there. I'm just going to leave it where it is for the minute. Upside is obviously all-time highs, so there's not really a lot you can target to the upside, but percentages of ADR. So just under ADR today, about 80% of ADR to the upside is upside target at 5R, and I'll just leave that where it is. So we'll see if that plays out today. DAX is long only. Not a lot we can do with that. Right, any questions on any of that? Any other things you think we should test on it? 30-minute test is something I am going to do at some point. I hate sitting here with 1% of profit on the table. I've got 1.7% I can bank right now. It's hard to hold it, especially when you've got other people potentially trading on the account. But anyway, this is why I don't really like having people copying me, to be honest, because it affects my decision-making process. Because and this is why I stopped running my signals before when I was doing them, because I'm sitting here now thinking, how many people? For a start, there's only 2 people copying this account anyway, so it doesn't really matter at the moment. But what I am thinking is, are the people sitting there copying the account, eyeballing their P&Ls and going, why on earth aren't you closing 1.7% of profit? So I'm also thinking, why on earth am I not closing 1.7% of profit? It really changes the way that you think about your trades. So I'm trying not to think of this as a copy. I am actually copying this as well. One of those people is me. But there's only one person actually following it. But yeah, it's one of those things where you kind of change your decision-making process based on the type of account that you're trading, which is one of the reasons I never want to trade up at the 200, 300K levels again, because when I was trading that size of account, my brain could not handle the monetary amounts. When you see that equating to 2,400 or 3,000 or $4,000 or pounds, for example, your brain cannot help but look at that as that's 3 months mortgage payment. I got to take that 3-month mortgage payment to lock in my mortgage. You're not equating it to what else is happening around the account. This is why I moved over to concentrating on this, because this 0.22 increase or decrease or whatever it is irrelevant, this column. And again, on the new dashboard, that is primarily one of the reasons I wanted this column hideable. So you can say, I don't want to see the profit. Yeah. This to me, you can't hide it there, can you? This to me is the important thing. Yeah. I am in the Aussie CAD, I'm in 0.2% of drawdown. I'm in pound odd and I'm in 1.36% of drawdown. So I need to deal with that. Whether I'm trading a $10 account, $100 account, $1,000 account, or $100,000 account is totally irrelevant. I am in 1.36% of drawdown. That's it. So when you are in bigger accounts, which is what everybody achieve, is their goal and aspiration is to get, I want to be trading big money because that can make big money, because big money makes big money. Small money makes small money. That's the way it is. You can't make big money with small money. That's why the Lambo people exist, because that's what everyone wants to do, but it's not possible. So that is what you focus on, because this is where my positions are at the moment. Subconsciously, if I'm trading a 300 grand account, I can work out what it is in money roughly, but this takes the focus away. And again, that can be hidden. Yeah. So, you can basically switch the dash over on each individual section to say, I don't want to see the profit column there. Account exposure doesn't matter, but I don't want to see the profit column there, and I don't want to see the profit column there. So just focus on account gain. You can't do it with this one though. Should we do it with this one as well? Just another button at the end of the day, which I can do. This is the trouble with this dashboard. I don't know if anybody's still there, but I'm just waffling now. I'm never happy with it. I've still got a list as long as your arm of stuff I want to do to this. But my problem is, if I don't stop doing stuff to it, it's never going to get out, is it? I'm never going to use it because I'm going to constantly muck about with it. So, now I've just incorporated something else I want to change, which is, again, it's really simple just hiding that, isn't it? You would think so. But when you are coding, hiding something will introduce a bug, or there'll be a loop somewhere that this is fed from, that when you hide that, these loops stop working because they're sharing variables and all sorts of other stuff going on. So every time you make a change, you have to check everything's working, because that one thing looks like it's working. Like yesterday, I did this. I put that button in. Yeah. When I put that button in, I had to change the loop so that it knew what the average price was compared to each individual trade price. I wasn't getting a trade price, so I had to go and get the trade price. When I got the trade price, all the lot sizes changed to the last trade taken. And it wasn't until I pressed that button and showed them all, I went, why is everything showing 0.1? So after 2 hours of coding, you go, shit, something I've done in the last 2 hours broke that. Go back through every change you've made in the last 2 hours and see if you can figure out where you screwed it up. Yeah, that's the sort of thing that happens. So a small tweak suddenly eats up half of your day because you break something. You don't know it's broken because you haven't checked it, because you don't check everything. Same with all EA development, all indicator development. It's all like that, unfortunately, which is where AI can help a lot of the times, because occasionally I can ask AI stuff and it will just say, you idiot. And I go, oh, yeah. But anyway, it has its uses, not for developing strategies, though. Right. I've just realised, oh, there's me. Sorry. I just realised I'd made myself hidden. Now I can't come back for some reason. Weird. I'm not coming back. Oh, there I am. So yeah, sorry, I forgot I turned myself off ages ago, and I've been talking to you and you haven't been seeing me. So yeah, so that's it for today. Nobody's got any other questions. I will disappear and let you disappear. I'm going to forward test this a little bit more, because I want to make sure it is doing what it's meant to do properly. There's a few tweaks I want to make to this as well. And I'm thinking about potentially releasing a limited version where people can't tweak much in it. But I'm not sure what I want to do with it yet. So, because it's very similar to the original ORB strategy. But I also need to test the 30-minute breaks as well, and just see if they're all profitable. I want to break the testing down into 5, 10, 15, and 30, and then a combination test, which is a little bit more work. But that's something I can do after I've released it, because I know it works, because obviously it's been out there for ages. I've been testing it for ages. I've been trading it for ages, just in different variations. So it's just a case of finding the best way to sort of utilize it, really. But I know now not trailing stops. But my quandary always is with everything, if I release something with loads of inputs like this, everybody loves it because they can test everything. If I release it without the inputs, everyone says, have you tried it with a trailing stop? And I say, yes, I tested it all. What was the test like? It's much easier if I release it with everything and just say, go and test it. I know it won't work, but you go and spend your time confirming for yourself that it doesn't work as well. So I'm just trying to figure out what I need in it and what I don't need in it, before I can sort of push it out and say, look, this is it. But I know people will ask me for stuff that it doesn't do. And that's my problem, is I like to put everything in it, so then I don't get questions. But anyway, my problem, not yours. Right, there we go. I'll leave it there. I will post something today on what I'm doing with these zone trades. This pound US dollar looks like it's pulling back out of somewhere. It doesn't look like an obvious spot, but I'm toying with the idea of shutting some of this out ahead of tomorrow, because we've got a fair amount of exposure on this account on the US dollar at the minute. So I might reduce some of this down a little bit ahead of tomorrow, but I'm toying with the idea of maybe leaving it on for the day, but I'll see what happens. But I'm just watching this profit gradually move away, and I'd kind of rather like to have it in the bank and do a little bit of drawdown control, but we'll see. All right, so have a good day. Anything you need, let me know. I'll be in Discord. I'll be working on this today a little bit more, and hopefully getting something ready for go. Also, you guys, I'm going to post this up on the marketplace, the MT4 version, and I'm just going to do it at a fixed price, but I'm not going to advertise it for 24 hours. I will post in the members group that it's live, and if you want it, you can go and get it at a cheaper price. I'm going to do it for $49. I will probably put it up to $69. That's what I'm planning to do. So if you want it, you can have it at the cheaper price. Yeah. And then I will put the price up. So it'll be one of those, go and get it now. Don't complain after 2 days that you only saw the post. Right. So if you're members and you're watching this, I'm going to post it also in the group, etc., etc. Let's hope MQL5 don't screw up payments. As far as I know at the moment, they're working, but you can't pay with PayPal. So I'm also trying to get it all implemented on my website, but the licensing thing is the big problem. MQL5 encode stuff in such a way that it's very hard to crack. When you do it yourself, it's, and it's not as easy to crack. And the problem is I have no idea who's bought anything, because they don't give you any of that information. So what if something was to get cracked, for example, and a load of people go, I've got your trade manager dashboard, help. If they haven't paid for it, I'm helping people for free, and it's just taking up all my time, and I've got no way of verifying anything. This is the problem with the marketplace. But you pay the 20% commission that you pay to the marketplace for them to look after your products and protect everything and make sure everything works. And, so it's, and then I can take any payment method I like. But it's quite a bit of work to look into doing all of that. So I don't know. But I also want to be able to give people, members specifically, special rates and stuff on things, and I can't do that with the marketplace either. So, and also I've got to work on the MT5 version. So again, if you're using MT5, it's only available for MT4 at the moment. But I will do an MT5 version. That will be high up on my priority list. But it's a piece of string with MT5, because converting code into MT5 is hit and miss. So, well, it's not. There's a specific way to do things, but it never works first time. Never works first time. It's like taking a BMW engine out of a BMW and sticking it in a Mini. You can squeeze it in. It probably will at some point fit, but it's not going to work very well when it starts, and you're going to need to tweak it a lot. That's basically switching between MT4 and MT5. They look the same, but under the hood, very different. So yeah, it's a pain in the arse. Anyway, I'll sort that out. So I will put a message in when I do it. Do get it up there, and obviously bear in mind this is release 1, so I'm pretty sure there's going to be a few old bugs coming in. Let me know about those. Right, I'll see you next time. Back tomorrow afternoon for a US session tomorrow. Trading the Nasdaq and the Dow, and yeah, any questions, stick them in the members group. All right, I'll see you next time. Have a good day.